So good afternoon, everyone, and welcome back to KW Property Management and Consulting's Best Practices Monthly Webinar for Condominium Associations. I'll be your host, Tim O'Keefe, an Executive Director and Partner with KW Property Management. Today, we want to address a very relevant topic that many of our attendees on this webinar have been following very closely for a number of months. Senate Bill 154 is a glitch bill to last year's Senate Bill 4D. The state legislature just finished their 2023 session a couple weeks ago, and they deal with a lot of different topics, but we care about the ones mostly that are going to affect the property management industry. So that's what we're here to talk about today. I think this year's legislation was probably one of the most highly anticipated sessions that we've had in our industry, waiting to see what came out of it because it affects so many of us. So we have a lot to cover today, so I'm just going to get started by introducing our excellent panelists, and we'll jump into questions. I want to introduce Donna Berger. Donna is an attorney with Becker Lawyers. Donna is a shareholder at Becker's Community Association practice in Fort Lauderdale. She has been a proactive source of information addressing all these Senate Bill 154 issues for many months now. We're delighted to have you join us today, and welcome back, Donna.
Oh, thanks so much for having me, Tim. Happy to be here.
My pleasure. And Alex Martin is a vice president and partner with KW Property Management. You see Alex is in his car dealing with Miami traffic. Alex works for several of our luxury high-rise communities, working with developers, bringing new properties online throughout Florida. So Alex, welcome back. Thanks for joining us today.
Thank you, Tim. And I want to apologize for everybody for being in a car. We, you know how the storms and the traffic still, but I'm not the interesting one here. Donna is going to be the interesting one in this call.
Thanks, Alex.
I can't agree with you more, Alex. So Donna, let's start with you. I have a bunch of questions and we'll get started. First question for you, Donna, is Senate Bill 154 is called a glitch bill. And the word glitch is defined as a sudden or unusually temporary malfunction of irregularity. So exactly what does glitch mean when it comes to legislation?
Well, I'm glad you asked that, Tim. So glitch bill, you know, when we talked about the tremendous impact that SB 4D had, not this session, the session before, because that was in the aftermath of the Surfside tragedy. And, you know, we have, of the more than 1.5 million condo units in Florida, more than half of them are more than 30 years old. So we had SB 4D. SB 4D was designed to address the issues that older buildings experience, but it created a lot of questions. So immediately after it passed, what did everybody start asking? When's there going to be a glitch bill? To answer your question, a glitch bill is usually a very technical bill where you're not changing the policy, but you're addressing any lingering questions. Those questions could be related to semantics, or there could be a conflict in the bill that passed with regard to other legislation. I think 154 for the most part is a glitch bill. It has not really changed the policy. So it has not done away with the structural integrity reserve study. It has not done away with the milestone inspections, but it was designed to address lingering questions in both of those topics.
So before we ask another question, I do want to take care of another administrative thing. There are poll questions that y'all can answer, as you'll see pop up on your screen. And if you have any questions, you can hit your Q&A icon at the bottom of the screen. We'll do our very best to address all your questions throughout the day as Donna gives us great information. So Donna, a number of people have kind of got this general question, but Ernie and Estero was wondering if structural legislation had been updated. That is, you know, that's what we want to talk about today. So you talked about, we had previously Senate Bill 4D, and then we had this glitch bill. I think a lot of people are expecting, well, they're going to change a lot of things. They're going to push the dates out. They're not going to make it as onerous as it feels to everybody. But the reality is we cannot afford to have another Champlain Towers tragedy like we did. And there is not a single municipality in the state of Florida that would allow for that to happen. So I think there's a lot of pressure on the legislature to get something done and to make it stick. So as much as people were hoping that there might be a little relief from what Senate Bill 4D was requiring, talk a little bit about just in general, what we get from Senate Bill 154 now, what's being required of everybody, because we didn't get the relief some were thinking of.
Yeah, I'll run through a few bullet points. And to Ernie's point, there is a few things structurally that were addressed in this glitch bill. Just so everybody knows, Senate Bill 154 has not yet been sent to the governor. Once it hits his desk, the governor has 15 days to act on it. In those 15 days, he can either sign the bill into law, he can allow it to go, become law without his signature, or he can veto it. We have no expectation that the governor is going to veto this bill. We think he will, in fact, sign the bill, or at the very least, it will become law without his signature. So let me go through and start, if I may, Tim, let's start with the building inspections and then maybe wait and then talk about reserves. So a couple things. One of the questions that SB 4D had it left in everybody's mind is, what's a story, right? It says 3 stories or higher. What's a story? What if we're sitting on top of a parking garage or another, uninhabitable structure? So this bill refers questions of building height to the Florida Building Code. So if you have a question in your community, do we meet the requirements of 154? Reach out to your engineer or your association attorney and get an opinion. He or she is going to refer to the Florida Building Code. One of the other things I think is really important is this bill excluded from the calculation of the increase in budgets. You know how we have that cap on 115% from the prior year's budget, or members can suggest an alternate budget. They have now excluded insurance premiums, Tim, from that calculation. And I'm sure at KW, you've got so many boards that are grappling with huge increases in their budgets as a result of huge increases in insurance premiums. In all the years I've been doing this, I never had a community where the members decided to substitute a budget. And this year I've had 2 that tried to substitute a budget. Some other changes that in terms of the inspections, milestone inspections may now be provided by a team of professionals that are overseen by an architect or engineer. And that was done because of the supply and demand issue, right? What have we been hearing since, and I guess I could throw this to Alex, what have we been hearing since the bill passed about how many associations need this work and how many architects and engineers are out there?
Well, there is currently, there is a shortage of engineers out there, and I highly recommend don't kick the can down the street, is get ahead of this, because no matter what happens, there's a deadline here, right, Donna? That is December 31st of 24.
Yep.
Correct. But I'm hearing
so
now
the deadlines, we'll get into that, but for the most part,
yeah.
Yes, end of 2024.
But I'm also hearing on some of the older buildings that were not taken care of, the city can come in here and give you 180 days and make a change. And yep. And what's happening here is it could take you just for 100 days. It could take you 1 to 2 months just to set a meeting, get the RFP process going out there to find the right individual to do this test. So what I recommend here is just to really get ahead of it now and talk to your management companies and start this process, the RFP process, and sit down with the engineering firms, see what the other buildings are doing, and don't just wait till something gets signed. You want to get ahead of this.
I couldn't agree more. To Ernie's question, Tim, about structural, the bill 154 adds the terms substantial structural weakness to the definition of substantial structural deterioration. Now, why is this important? Because remember, you don't need the phase 2 of the milestone unless the visual phase 1 of the milestone inspection reveals substantial structural deterioration. But now they've added language that says substantial structural weakness. I'm not an engineer, I don't play one on webinars. So that's a question for your engineer when they're undertaking phase 1 of the milestone inspection of, how does this new change of adding in substantial structural weakness going to impact whether or not your community needs a phase 2? The other issue 154 addressed was this coastline issue. So now the local authority may determine that proximity to salt water requires a building to perform its milestone inspection, its initial inspection, by its 25th year. Remember, in 4D, it said 3 miles from the coastline, right? Now 154 says that the local authority may determine, you know what, you're 5 miles away from saltwater, but we still think you need to do this. So that's a pretty significant change. Another significant change is the local authority having jurisdiction, which is your local building department, may extend the deadline to perform the milestone and the repairs for good cause. If the association has entered into a contract for the milestone and it can't be completed by the 2024 deadline. But to Alex's point, don't delay. They want to see that you're under that associations who are impacted by this legislation are in good faith taking steps to comply. One other huge change was a lot of our clients, our mutual clients, Tim, they had said when 4D was passed, well, hey, we just did a 40 or 50-year certification, right? Now, does this mean we also have to do a milestone? We just did this. And 154 answers that question by saying that they may accept a 40 or 50-year certification report that's been performed before July 1st, 2022, if it substantially complies with the milestone inspection requirements. And then we can get into the notice issues if you want to get into that. There's a
Let me ask a question. So Elizabeth's asking a question. It's kind of an interesting question. So based on what we're talking about, she says it's her understanding that the association should wait for a communication from the agency. I'm not sure who the agency is. The agency prior to having to do the inspection. Is that correct? I mean, the onus is on the association to comply. There's no agency that I'm aware of that's going to send you a notice that says it has to be done.
So I think she is referring to in 154, it does say that phase 1 of the milestone must be completed within 180 days after receiving notice from the local authority. But that's just a new deadline to say, hey, if the local authority sends you this, you got 180 days to comply. But I'm going to go back to Alex's point, which is that's not a lot of time. So you better have already been down this path. You can't sit around and wait and say, well, we never heard from the local authority. We saw that in Miami-Dade and Broward, didn't we, Tim and Alex? That, you know, before Champlain Towers, there were only 2 counties out of the 67 Florida counties that had certification requirements, those being Miami-Dade and Broward. And even Miami-Dade and Broward, I had some clients that 44 years and they still had not heard, and they were well past their 40-year certification. So the answer is no, it is not my recommendation that you sit around and wait for the local authority. All this language is saying is that when you do get that report, that notice from the local authority, a couple things have to happen. 14 days after you get the notice, Tim, from the local authority, you have to let everybody in the community know you got that notice. And then within 180 days after receiving it, you have to comply with phase 1. And then if phase 2 is needed, the architect or engineer must submit phase 2 within 180 days after submitting the phase 1. Also, the other major change that SB 4D completed was that in the past, in Miami-Dade and Broward with the 40 and 50-year certifications, the engineers would send those reports only to the board. Now they have to send it to the local authority and to the board.
And so Donna, can you clarify again? I know you talked about it, but what's the difference between the milestone inspection versus a structural integrity reserve study? Because there's phase 1, phase 2, right? So let's be clear for everybody on what those are.
And there's overlap, Tim. So the difference is the milestone inspection is an engineering inspection where your engineer or your architect comes out or they oversee a team and they're looking at your building and they're looking at the different components and they're creating a report. And they're telling you in phase 1 whether or not there is substantial structural deterioration, which warrants a phase 2. And basically, it's an engineering report to tell you how safe is the building. The structural integrity reserve study is how to pay for it and how much money should you be setting aside to address repair and maintenance projects. That is the structural integrity reserve study is a study that is prepared by a reserve company. And they have a reserve specialist. And SB 154 now addresses another issue, which was a lot of reserve companies did not have an engineer or architect on staff. So SB 4D originally said that the structural integrity reserve study requires a visual inspection of those components by an engineer or an architect. This new glitch bill changes that, Tim, to say a reserve specialist can do that visual inspection. And on top of that, if you have a 40 or 50-year certification that basically substantially meets the requirements of the milestone inspection, that will also satisfy the structural integrity reserve study requirement for a visual inspection. Does that, I know it's confusing, but does that make sense? They've kind of covered their bases on that.
It does, it does. And so a property is sending in this question. They said, if the association currently reserves for line items requested by the SERS, is the association still required to perform the SERS?
Yes, you still have to have a report.
Just because you have money for it doesn't mean you
Right.
don't have to do it, right?
Right, and we're going to talk about funding, but yes, remember there's a deadline for the SERS too. And 154 now says you should do these things simultaneously, the milestone and the SERS. So yes, even though you set aside money for it, and we can talk about the changes now because they added some things, Tim, to the reserve component. They took out a few other things and they clarified some stuff.
And then Herb is asking a question about what is the definition of alternative funding?
So alternative funding, is it Herb who asked this question?
Yes, yes.
So we say, Herb, here's the thing. Alternative funding is typically a line of credit. And it's wonderful. And we suggested that. We said, listen, instead of, loading up the budget, what about allowing associations to say, hey, we got a line of credit that, when this comes up, when the roof needs replacement, when we need to undertake waterproofing and painting, we've got this line of credit. Well, guess what? They allowed that alternate line of credit in lieu of having to fund reserves, but only for one association in the entire state of Florida, which is a multi-condominium association operating more than 25 condominiums. So one association in the entire state of Florida, to my knowledge, gets to use the alternate reserve funding source. What I would recommend for our listeners is now that your legislators are going to be home for the summer, go call their district office, knock on their doors and say, hey, we want that too. That sounds like a pretty good deal. We'd like to be able to use a line of credit and have it set up. So if we need to undertake repairs and maintenance projects, we can do that instead of this mandatory reserve.
And that's going to be kind of an important thing because, I think there's some thinking is to fully fund reserves is a lot of properties are very deficient as far as fully funding reserves. So at least having the line of credit so you have access to the money versus putting all your money into account and not and being out from it personally, your association might be able to gain interest on that, but individual owners are going to lose some of their personal money. So if we have a line of credit that we have access to, can that count toward the 100% funding required for the SERS?
It should, and that's something that was done again for one association in the state who had a really good lobbyist.
Yeah. So Donna, I should have asked at the beginning, but you're not just knowledgeable about this because you're a good attorney and you spend a lot of time reading about this. Why don't you talk a little bit about, let everybody on our webinar know today, your daily involvement in trying to help craft this, the law that went into place for 154 and other bills that go into the condominium and HOA world that we're in, because you're very active in that, dealing with people in Tallahassee and the different legislatures. So why don't you give people a little bit of background about how involved you personally are?
I used to be very involved, and I appreciate the kudos on that. I was less involved. I've been less involved. I used to be a registered lobbyist and would go up to Tallahassee on behalf of our entity here at Becker called CALL, which is the Community Association Leadership Lobby. There's other groups, CAI FLA has lobbied, CEOMC, but yeah, I did communicate with several legislators this year. There is someone I call a very tenacious hobbyist. He's a retired Cornell lawyer. He got a lot further. He was this was his full-time job. I'm not going to name him, but it was somebody who was retired and he just made this his hobby and picked my brain and the brains of a lot of other people, including you, Tim. I think you've got a file on this person. So we all tried to pitch in. As you said at the outset, we can't have another tragedy where a building collapses in the state of Florida. We want to prevent any other tragedies. So to the extent that we could give input on how best to make sure these buildings are inspected and how best to fund them, then we're all going to pitch in and do that. I will just say it's somewhat shocking to me on the one hand that 154 passed, and on the other hand, the Florida legislature, and it's become law, SB 360 has completely eviscerated, well, not completely eviscerated, but they reduced the statute of repose for hidden defects in Florida from 10 years to 7. And that's significant, not just for new construction, but that's significant for all of our clients who are undertaking these concrete repair projects, these concrete restoration projects right now. And they may not know for several years if that contractor did a really good job or if there's some hidden defects there.
And that's a good point, because that, for the newer buildings, a building that's 30 years old doesn't apply to them, but for the newer buildings, it really provides a little bit of relief from a liability standpoint for the developer, or whoever the general contractors were in the process of building a building. Back to the funding, Claire is asking, can pooling be considered an alternative funding?
Well, pooling's not an alternative funding. It's a different way of, it's a different methodology. Pooling is a cash flow methodology where a board has more flexibility. When the next, you can pull from that pooled account without taking the membership vote that would be required from if you had straight line reserve. So it does give you more flexibility. You can pull out for a roof project, let's say, just as long as you replenish, you've got sufficient money in that pooled account for the next time the next component comes up. I should mention that 154 also makes a significant change in terms of the percentage needed to waive reserves, Tim, or to use reserve funds for a non-reserve purpose. It used to be a majority of the members voting, present and voting at a meeting at which a quorum has been attained. So that would be a majority of a quorum. The legislature changed that now under 154 to a majority of the total. Now, if anybody's taking reserve funding votes right now, I have a couple clients who are, 154 is not yet the law, but it could become the law tomorrow. It will become effective upon the governor signing it or the 15 days lapsing. So if you've got a vote pending, I would go with the higher percentage because 154 may become law at any day. And it requires that higher threshold. But to answer her question, no, pooling is not an alternate funding source. It's just a more flexible form of reserve funding.
Yeah, and one of the when Senate Bill 4D came out, they identified 10 key areas that were considered structural that needed to be addressed in the SIR study. Did 154 address those 10 things? Because there were things like supporting walls and piling. Someone actually asked a question: does a piling count as structural reserve with a useful life? And so I guess the question is, did 154 address those 10 items, and did they take some out, or did they leave them all in?
They did. So they removed floor and foundation, but they included the word structure. So you tell me, can you have a structure without floors and foundation? Probably not. Probably not. They added the words exterior doors, okay? Because remember, we had that whole issue with windows in subsection G, but they did add language that the association does not have to take reserves for replacement for items for which the association does not have the responsibility under the declaration. So they did add that language that, hey, if the association is not responsible, let's say, to maintain the windows or the doors, they don't have to take a reserve for replacement of those items unless they have the responsibility. Let's not forget that in our multifamily buildings, there are common area doors and windows. So you will still need reserves for the common area doors and windows. But just because you don't need to take reserves for the replacement cost of those items, the association still does need to take reserves for deferred maintenance. So again, all of our listeners, this is a lot to absorb. I would definitely get a legal opinion from your association counsel to, once 154 becomes law, to say, hey, just tell us what we have to reserve. There's still the question of whether or not subsection G reserves can maybe pooled with other reserves. I guess that's for a future glitch bill, Tim, which I'm sure we're going to get another glitch bill.
So John comes from a cooperative, and I got this question a couple of times. Are co-ops under the same requirements of Senate Bill 154?
They are.
And then another question was, when does the 15-day term expire for Senate Bill 154 to become law without without the governor's signature?
Once he gets it, and as of this morning, he hasn't gotten it. They sent bills over in batches, and I don't know the methodology. I remember when I was up there, they tended to always, when I did lobby up there, Tim, to keep the condo stuff back a little bit because it was a little controversial, but it hasn't gotten to him yet. But we do anticipate that it will likely, what are we today? We're May 24th.
Mm-hmm.
We typically know by early mid-June, everything's been acted on.
So we don't expect there to be any surprises when it comes to approving these new bills into law. So let's talk about reserves and what does it actually mean to be 100% funded, fully funded by December of 2024?
Well, that's interesting. A couple things. 154 said that you can add an inflation factor in now. Remember, for years, people didn't add an inflation factor because reserve companies were relying on a division ruling that talked about balloon payments, and they thought that prohibited the addition of an inflation factor. And as we know, given the rise in inflation the last couple of years, if you've done a reserve study and you were relying on one from 7 years ago, there's no way you were fully funded because you didn't add in an inflation factor. The statute now says, let me just read it to you, that you have to rely on your latest structural integrity reserve study when you're doing your budget. So again, you're only required under the law to do a structural integrity reserve study every 10 years after you do the initial one, which is due by the end of 2024. I don't know whether a glitch bill is going to change that. I just had this conversation hours ago with a client, and one of my questions was, they just did their milestone, they did their SIRS. I said, when are you going to do it again? They said, next year. We're going to do another reserve study next year because we want to stay on top of whether or not we are fully funded. I think the person asking the question, though, Tim, is saying, do we need to catch up? So let's say we have waived for a decade and we've got 50 grand sitting in our reserves. Do we need to catch up? Well, a couple things need to happen. One, you need to get a structural integrity reserve study. You may have, even though you haven't been funding reserves, you may have been undertaking regular maintenance and repairs, which means your estimated remaining useful life of components like the roof or the painting and waterproofing, you may be in pretty good shape, right? But you won't know that unless you do the SIRS, what I'm calling structural integrity reserve study.
So we still see boards that are waiving reserves this year. And so it's just going to be more catch up when they have to. But a good question from Bob in Lake Worth that came in, and Joseph also asked a very similar question. And Bob's saying our condo has 960 units, but no building over 2 stories. Can we still waive reserves?
So there are 2 stories. They're not going to be impacted by either of these requirements, by milestone or by the structural integrity reserve. Yes, they should still be able to waive reserves. I would say to them what tends to happen, what I learned as a lobbyist, is once the legislature addresses one issue, they continue to spread it out. For instance, right now, associations who operate 150 more units are required to have a website, right? And you guys provide a website for them. But there's been talk for years that they need to lower that from 150 units, 75 units to 25 units. Hasn't happened yet, but it's on the, it's up for discussion. So what I would say to our lower level communities, you should still consider that having reserves is a good thing. And while right now you're still able to waive them, that might not be the case, and then you may be in a catch-up position.
That's a good point, because sometimes the laws get made and they have certain cutoffs based on size or time, and doesn't necessarily always make sense. If it's the best practice, I always believe everybody should do it if it's the best practice. And two-story buildings have issues with reserves as well, and maybe they just look at two-story buildings as having less risk of collapsing, so they take those out. But at the end of the day, they still have to comply and it's all about keeping your property well maintained, and which improves property values, which improves resale. And that's all part of the whole process as a homeowner that you want to go through. So you always want to maintain your property the best you possibly can.
And purchasers, Tim, are getting more sophisticated. So they're starting, as are their realtors, and they're asking these questions. Do you have fully funded or at least partially funded reserves? May I take a moment to just talk about the budget issues we're seeing right now? So many communities, and I understand, I served on my own HOA board of directors. I always joke it was the longest 2 years of my life, but I felt like it would give me a different perspective. And boy, did it ever give me a different perspective sitting in that director seat. So many associations right now naturally want to keep the budgets as low or status quo as possible, right? I mean, people are freaking out. They don't want to see their budgets, double, triple, quadruple. But what concerns me when we're talking about reserves, and you mentioned continuing to waive or partially fund reserves, is that they may actually be buying themselves collection issues in the future. And let me tell you why I think that. Because you have people that are buying in your community right now who may just barely be able to afford those assessments, right? They're not thinking long-term. They may not be thinking that, because again, they haven't been sitting in your director's seat. They haven't seen the quotes on insurance premiums. They haven't seen years of budgets and maybe the upward trajectory. So they like the community. They like the property they're buying, but they can just barely make those assessments. If your budget is not, budgeting reasonably for reserve funding, and instead you're thinking that you're just going to pass a series of special assessments to make up the difference, now you're potentially buying yourself real delinquency problems down the road when you pass those special assessments because your budget was not reasonably set up to address reserves. It's something to think about. Also, the division's position on reserves is that reserves should be funded through the budget, not through special assessments. You can fund the projects through special assessments, but not necessarily funding. That's not a long-term sustainable plan, that we're going to keep the budget low, but we're just going to hit you with a series of assessments to fund the reserves.
Okay, and then Elizabeth's got a couple of questions here. She's asking, is the structural reserve study different from the regular reserve study? And then in her community, they've got a few buildings that are over 2 stories. So does the law only apply to buildings that are 3 stories or greater? Or does it apply to everything if you've got a property that has buildings that are bigger than 3 stories?
Let me start with the second half. I believe it only applies to 3 stories or higher, but again, this is a general webinar. Please reach out. I'm not providing Elizabeth direct legal advice to her community. Reach out, unless she's my client, then we'll talk later. But reach out to your association attorney. In my opinion, the law speaks to the building, not an association, and it applies across the board. But you have to think about something. If you've got those communities, as I do, where you've got varying building heights, number one, the people in the lower level buildings, they may want access to that same information about the structural integrity of their building. They may want to know that they've got reserves on hand to pay for ongoing maintenance and repairs. And guess what? That prospective purchaser in the lower level building may want that as well. So it's really a business call, a business judgment decision. As long as we're doing this, should we do everything? So it really applies across the board and everybody has the wealth of this knowledge. The second half of the question I think Elizabeth asked is, what's the difference between the SIRS, the structural integrity, and a regular reserve study? It's just those subsection G components. So before SB 4D passed and now 154, most reserve studies were not looking at foundation or concrete. they weren't looking at the stucco or the slabs or the columns. Now you've got doors and windows and plumbing and electrical systems. So there are a few things you have to look to what we're calling subsection G components. Those are the different things, and there's a lot of overlap between a regular reserve study and a SERS. And remember, now they also say if you've had a certification report, that may fulfill the requirements for that structural integrity reserve study as well.
So Donna, we're talking about all these requirements, and compliance is going to be really important. So who's going to police condos to ensure that they're complying in a timely manner to Senate Bill 154?
They added language, Tim, in this bill that says the division now has oversight for any complaints. So just like an owner can pick up the phone and call the ombudsman or call the division or the Bureau of Compliance and complain about the parking situation or the fact that you're not holding meetings correctly or anything else, now the division will entertain complaints about boards if an owner calls and says, hey, they didn't do milestone inspection on time, or hey, we don't have a structural integrity reserve, or guess what, they didn't send out the notice from the local authority within 14 days, or we got the notice but the repairs have not been completed. So we do now have confirmation that the division will have oversight. And remember, SB 4D imposed liability for breach of fiduciary duty if boards don't comply with these deadlines.
So basically, there's a lot of self-compliance then. If an owner turns in the association for not getting something done on time, then the division, the DBPR, can review it and make a determination. And what kind of penalty would you think there'll be? Is there a definition of what penalties?
They haven't said that yet. They haven't said what the penalty might be. Normally maybe they'll come out with some rules, some new administrative rules as a result of 154. We just don't know that yet. You got to ask yourself, if you're listening, do you have anybody in your community who's a little disgruntled and might complain?
If you're living in a condo, you'll have at least one, or it can't be.
You got at least one. You have at least, I'm sure, in every community, unless it's like my smallest community is 3 units, and they still had somebody who was a little grumpy.
I actually talked to someone yesterday that has 14 units in their property, and they said we all get along really well, but there's one guy who picks on everything, on every single little compliance issue. It's always sending notes to the board about, did you do this, did you do that? So I think for some people it's entertainment to be able to pick on the board and pick on the association to make sure everything's getting done the way they think it's supposed to be. When it comes again to funding, can a board approve to borrow funds for a special assessment for the milestone inspection without an owner's vote? And the reason I asked that, I had a board member call me about a month ago, and they said, we need to get a special assessment passed for these for the milestone study, and we're not going to be able to get it done. Like the owners are not going to approve this. So if they aren't going to approve allowing us to spend the money, how do we force them? She said she asked me to call Senator Bradley and force them to change the law so that board members could get things passed without owners' requirement for special assessment. I said, unfortunately, I don't walk on water. I don't think I'll be able to do that.
Yeah, that's a problem. And again, this is why when you're drafting significant, impactful legislation like 4D and 154, you really need to take a holistic approach and look and see where might there be some issues with compliance with these new requirements. And I think you've hit on it, which is in some communities, the developer created documents have really handcuffed the board. And so there's some communities, I see their governing documents, they can't pass a special assessment for repairs, for maintenance, they can't borrow money. Well, then how are you supposed to comply with all of these new requirements? That may require a declaratory statement from the division, if that's the route they want to go, or perhaps amending the documents to remove that language, remove those handcuffs. But it's certainly a conversation that needs to take place with the association council to say, hey, just how enforceable are these handcuffs in our governing documents, when we have a pending deadline here, and we have personal liability if we don't get this done.
And that's a great point, because you need to have the funds available to make it happen. And if it's going to reach a point though where you can no longer push off reserves or waive reserves, you're going to have to fund for it, and you have to go out and find the funds for it. If you don't want to hit everybody up with special assessment, you got to find the funds through the banks, and the banks are more than happy to loan money to condominiums because they're a pretty safe bet that they're going to get repaid. So we have very good luck finding money for condominiums when we need to do that. So let's talk a little about education. So we know when a board member gets on a board, they're required to be certified within 90 days before or after joining a board. Is there any discussion or anything in the law that requires board members to go through an education on SB 154 so that they really get what the requirements are of their association, or is that something that'll get tackled later?
It's going to be tackled later, because 154 did not include any sort of requirement for mandatory board education related to these requirements. It needs to be there, I think, especially given what's at stake. So, you get people on the boards, and we were talking about this previously. It really runs the gamut in terms of skill set and life experience. We've got all sorts of different people serving on boards. Some are very savvy. They've served on boards before. You have some people who this is the first board they've ever served on. We even have people who, a lot of people who are coming from different countries where Florida law is confusing. By the way, it's confusing to us as well. The shared ownership statutes in Florida are not well written. I often refer to them as bloated, given how many pages. You ask any particular association attorney, 718-111 and 718-112, they're just crammed with stuff, most of which doesn't really go together. They don't coalesce well. So to answer that question, do I think it would be a good idea to require somebody not just to sign off and say that they've read and understand the gov docs, but to actually take a course specifically on what these requirements are? 100%. And there has to be a way there was a reporting requirement, Tim, that was part of 4D. So the state knows which buildings are impacted and are 3 stories or higher. In that case, those boards in those buildings should be educated exactly on what this means.
Great. Alex, I'm going to ask you a question so you can unmute yourself. How can a management company like KW help its associations find the expertise through engineers, through banking? How do they help find the expertise to meet the deadlines that condos have out there? And Alex, you're still on. Okay, you just unmuted.
Well, we have a network. We share as an organization on a global scale. We share what other buildings are doing in best practices. So we usually bring in the top performing individuals when it comes on the engineer side, that comes with good references. On the same side, on the banking side, we see the banks that are lending if somebody needs a special assessment, better rates. So we usually connect those individuals with the board members of the association to make sure they get the best rate possible for whatever projects or whatever items they need to get done.
And I think that it's helpful. This is my personal opinion, so it's very biased, but for anybody out there that's in self-managed buildings, like, it's going to be harder and harder to remain self-managed with these changing laws and the requirements, because when you're with a management company like KW, we can reach out to not 1 or 2, but probably 5 different engineering firms and say, we really need you to come into this property and help us get this structural integrity reserve study done. And they're going to respond within the same day, the next day, or the next day. And what I oftentimes hear with self-managed properties is they'll call, leave a message, and they may not hear back for 3 weeks or 4 weeks. If they do get on somebody's schedule, it could be months out. So management companies have a little bit more connections with those boards or with the vendors, and can help get things done. And we think that that's very helpful. Working with banks to make sure that special assessments get done. It's not really, we don't think it's the board's responsibility to go out and source the banks and try to get all that loan documentation in place. It's our job to do that. It's our job to bring it to the board's attention and let the board make decisions on who they want to use. But it just makes sense from our perspective, from a very biased perspective, to work with a management company that has the ability and the enough authority to be able to get vendors to react for you, so that you're not staying up at night and spending time worrying about meeting deadlines. That's our job as management.
Tim, can I add to that?
Sure.
So we did a study years ago, and CAI did as well, and I think half of the associations in Florida are self-managed.
Mm-hmm.
So where are
Yes,
they
they are.
getting their information? By the way, normally if they're self-managed, you know what else that means? They don't have attorneys on retainer either. So they're kind of doing everything on their own. And with these significant, legal changes, it concerns me for that significant percentage of associations in Florida that are self-managed. Where are they going? I will add that by the end of 2024, under SB 154, the Florida Building Commission must adopt rules to establish a building safety program. So we'll be looking out for that. I'm sure you guys will as well. And we'll be getting that to our respective clients as to what those new building rules that have been adopted by the Florida Building Commission and how they impact buildings.
And we will treat that just like we treat hurricane season, which starts next week, which is, by June 1st, every one of our properties has a very detailed, customized hurricane plan for that building. And when those laws change, like we'd look at our standard operating procedures and we would put those kind of practices in place too, so that, again, it's not the board's responsibility to worry about that or get that done. It's our job as management responsibility to craft what that looks like, what that program looks like, roll it out to the board and let them provide their feedback so that we can finalize it and make sure, we have in-house counsel as well as associations have their own attorneys, which is important, and they can work together to make sure that the laws are being met and that everybody sees it the same way. So compliance is very important. We still have a couple more questions that we received prior to today's session that I don't think we've covered everything just yet. Karen in Palm Beach asked a couple of really good questions. What is the latest update on the ability to factor borrowing and debt repayment into the calculation of reserve assessments to owners?
I'm not sure I understand the question. So can you repeat it?
So what's the ability to factor borrowing and debt repayment into the calculation of reserve assessments to owners? So I think the way I interpret that is, can you, I guess there's two different methods. You can make it part of the maintenance fees to borrow. If you're borrowing money, you can increase your maintenance fees to collect funds for the reserves, or you can borrow those funds and special assess. Like, those are a couple different options that you have.
So remember, under the law now, as it stands, only one association in the state of Florida has the legal right to say, hey, we have a line of credit, which is an alternative funding source for reserves. Remember, I said a few minutes ago, the division stance is that reserves, because they are recurring expense, should be funded under the budget. But what you can do is, if you put a certain amount away in reserves, but it's not enough, you specially assess for the project, not to fund the reserves. And this is especially true if you've asked your members to only partially fund reserves, let's say, okay? So they vote and they say, yeah, we're going to fund reserves at 50%. But then the board says, you know what, we still want more in reserves. If you pass a special assessment, in my opinion, to then put the money in the reserves, you have undercut the mandate from the membership, because they told you, we only want to put 50% in reserves. Instead, you would pass that special assessment, Tim, for the project at hand, whether it's a roof replacement or concrete stucco. So you have to be very careful that the board is not, on the one hand, asking the members how they want to handle something, and then they tell the board how they want to handle it, and the board goes, okay, but now we're going to do this. So you have to be very careful the way you structure both the reserve funding and any sort of reserve funding vote you put out to the members, as well as what your actual needs are for repair and maintenance projects.
Just on that point alone, it's why you need to have an association attorney. to make sure that they're helping you through that. And your management company accounting department should be able to provide some guidance from an accounting perspective. So you don't do this on your own, please. It gets complicated. Herb's back asking a question. I think this is a good question, Donna. Does D&O insurance cover non-compliant board members regarding Senate Bill 4D or 154?
A question for your agent, but from the legal perspective, if you have reached a statutory obligation, and this is baked right into the law, that says if you don't meet these deadlines, that's a breach of fiduciary duty. Unless you have a policy that is atypical, chances are you will not have coverage. Typically, the D&O coverage does not cover for knowing and willful violations. And remember, it gets us back to certification, right? You've signed off a form saying you've read and understanding you're going to uphold everything.
Okay, and then Joseph is asking, does the local documents or bylaws have to require a board to get membership approval to give a special assessment, or can most boards pass special assessments to meet unexpected expenses?
Listen, most boards do have the unfettered right to pass special assessments for maintenance and repairs. There's always the concern that you don't want to give your board an open checkbook to erect a statue of David in the lobby because somebody on the board thinks that's a great idea. But you have some documents that were created and they do handcuff the board, but there's nothing in the statute, Tim, that discusses that. That's purely document driven. And this is another good plug to say, if you haven't reviewed or dusted off your documents in decades, now's the time to do it. Because maybe in the past you didn't have all these requirements, this is a real tough time to be sitting as a volunteer on a board. You're only as good as what's in your documents. So if and this is true for insurance premiums too. I'm sure you're looking at this. The last couple sets of documents I looked at required the board to get 100% replacement value, regardless of cost. That's not something you want in your documents right now.
Good point. That's a good point. I'm not going to say the name because you don't have to answer this question either, Donna, if you don't want, but it's being asked. This is a 500 unit self-managed cooperative, and their president receives a monetary gift. I won't say how much, but a monetary gift per year in appreciation for their time spent managing the property. So I'm assuming the president's also the manager, and they're self-managed. So he's saying, I believe Florida says he should be certified if paid. So he must not be. So let's just assume he's not licensed. Do you have to be licensed in order to get a bonus for managing a property? I guess
there's a lot combined there. So a couple things. One, if any board can self-manage, but if the operating budget exceeds $150,000, you need a licensed CAM. Okay, you can have board members that are taking on projects, but they're not acting as a manager. Okay, one can be in charge of landscaping, one can be in charge of security, but this president cannot be holding himself out as the manager without a CAM license. But secondly, if he's getting paid, that's a conflict of interest that needs to be disclosed. And then the rest of the board has to decide whether or not they're okay with it. Also, the owners could vote to overturn that contract that the association has with the president. Lastly, I don't know how many people know this, but the statutes do allow directors to be paid just for serving on the board if it's in the bylaws. So in some governing documents, they do allow directors to be paid, but it has to be a provision in your bylaws, in your recorded bylaws, not just a board rule.
So the other thing that has come up, and we're running short on time, so I'll just ask a couple more questions. Insurance has become an issue, and you mentioned earlier in the program that the cost for insurance is escalating, and we're seeing costs going from 30 to 300% increases depending on the property. And that was a question that somebody had asked for. Is the state legislature doing anything about insurance to try to control the rising cost of insurance? And there's 3 or 4 people that have asked that question today.
So one thing they did, I mean, they've rolled this all under the tort reform umbrella, Tim, that the reason insurance is so expensive is because of all these lawsuits, all these horrible lawyers bringing lawsuits. And then they passed that, and that was last session, and we really haven't seen any sort of positive impact in the marketplace. Look, these are ongoing conversations. We're keeping track of them. I think it was House Bill 799. Citizens actually stepped up and did something to help. They basically said that if you are a citizen's HO6 holder, so you're an interior unit coverage, you're on the 12th floor, you don't need to buy flood insurance. So that was one way that they were, and I'm not just saying 12th floor, they're basically saying that if you're an HO6 condominium unit holder, you don't need to buy flood insurance because the association's master policy should cover that. So that was their one little contribution for individual Florida condominium unit owners to say they don't need to get flood insurance. Of course, on the other hand, they have a sliding scale of all property owners in Florida to have them have flood insurance by 2027. So to answer your question, no, not much has been done. Again, what they did in 154 though, is they said you're not going to use insurance premiums in that calculation of whether your budget this year exceeds 15% of the prior year's assessment, because everybody's budget could be thrown out the door then.
And we know that there are a number of properties that it's quite a burden with the increase in insurance. We've had properties that have seen insurance go up by 350%. And, for a lot of these properties, that's just very difficult to be able to adjust very quickly to be able to pay for all that. So, you have different options when it comes to your insurance. You can finance your insurance. You don't have to write that big check once a year. You can get financing for your insurance and spread it out over 12 payments. And that's an option that you could talk to your management company or your property manager, your attorney, about how you could go about making that happen, because we do know that to take $1 million or $2 million increase, which we've seen in some properties just on insurance in a single year, is just too much to take on in a single payment.
Have you heard clients, Tim, saying they want to self-insure? I've had several clients now say, tell me about self-insurance. Here's what I say. Your deductible, because a lot of them are going from a 5% deductible, 10% or higher, or even the cap on replacement value, which might be lower than what the appraisal comes in. That's self-insurance. What's not self-insurance is we're just going to go bare. Okay. The statute says if it's in the marketplace, then you have to use your best efforts. Now, that doesn't mean you have to get it at any cost, but this gets real complicated. There are loss assessment companies out there that will come and talk to you about, what's the likelihood of you, suffering damage up to your full replacement value. But what I will leave our listeners with this: self-insurance under the statute references a self-insurance fund, or a SIF, where you band together with other types of communities throughout the state, and you have to get that fund approved by the Office of Insurance Regulation. It's never happened. A Palm Beach SIF years ago tried to do it, and it never got off the ground. But self-insurance is not, I ask all 29 unit owners in my building sign off and say we don't need windstorm. That's not self-insurance.
And I had a conversation with somebody about this a few months ago, and my recommendation is you don't want to do that. You have a fiduciary responsibility to the association, and going naked on insurance is not a good idea. If something catastrophic happens, every single person could lose their home. And the best way to be, I'll call it semi-self-insured, is just increase your deductibles. You can do that because the likelihood of exceeding those deductibles is probably never going to happen. So that would be, one way to self-insure. It'll reduce your rates a little bit if you go to 10%. A lot of people were at 2% for a lot of years. Now we're seeing them go to 5 or maybe more. And it's sort of a way to self-insure without truly self-insuring. So we come up to the top of the hour. Donna, you've been fantastic. You got so much knowledge. We could talk all day. Thank you for your time. And Alex, thank you for your time. But before we go, I do want to have Donna talk about her podcast, because she's got great content on her podcast. She pushes out every couple of weeks. So tell all of our listeners today, how do they get to your podcast, Donna?
Well, thank you so much. Well, it's Take It to the Board. I love that title because it's like, hey, let's take it to the board. You can take it to the board on Apple or Spotify or YouTube. Today's episode was with my partner, Jay Roberts. I don't know if you've dealt with Jay. He's up in the Panhandle, but he's our in-house constitutional scholar. And we talked about whether or not you can, have sign rules, participation at meeting rules, preventing people from bringing guns to the meetings. We called it Guns, God, and Gab. So it's all about constitutional law. We're at our 51st episode in our second season. And Tim, I got to get you or Alex on the podcast.
Okay, we'll be happy to do that.
All
Donna,
right.
just in closing, this is from an anonymous attendee, but they say Donna for governor. Final point.
I don't think politics would in any way enhance my life, but thank you. I like the vote.
Well, if you stay around our country long enough, the older you get, the more you want to become a politician. So
thanks so much for having me, guys. And thanks to our listeners for everything you're doing, serving on boards. It's a thankless job. Hang in there.
yeah, we thank you for it. For those of you that I think one of the things, there's a lot that was covered today. Donna has so much information to share. We will email everybody the recorded session. Please listen to it again. Find those snippets of information that are important to you and your association. Share it with your board members, because this is a very critical topic that everybody needs to be educated about. And so we'll send out the recorded session to all of you, and you might want to listen to it again. But on behalf of everyone at KW Property Management Consulting, Donna and Becker Lawyers, we appreciate you joining us today. We hope you all stay healthy and be kind to your neighbors. Thanks so much.
Thanks, everybody.
Bye-bye, everyone.